Nope, there isn't. Holding Bitcoin in a Bitcoin wallet doesn't cost you anything. If it does, something is very wrong. The entire reason you ostensibly got into this is to invest it with a very reliable platform and get double of what you invested in 7 days. So if owning your Bitcoin is costing you per month, something is strange. Now, the tricky part is giving that Bitcoin to someone else. Remember, Bitcoin transactions are supposed to be on the blockchain. Exchanges don't quite do this, which neatly sidesteps both the problems and raison d'etre of the blockchain, but we'll ignore that for now since they have their own transaction fees. Financing and withdrawal fees on exchanges. A few trades necessitate that you pay an expense to send money to, or get money from, their foundation. This can incorporate both customary monetary standards and digital currencies. The expense that trade charges to add assets to your record is known as a subsidizing expense, or a store expense. The expense they charge to send assets from your record to an outer wallet is known as a withdrawal expense. Exchanging fees. Most trades charge a modest quantity, normally 0.1% to 0.2%, for each exchange you make on their foundation. This probably won't seem like a lot, however, it can add up in the event that you as often as possible exchange cryptographic forms of money. You may see these exchanging charges alluded to as producer and taker expenses. These terms allude to the way that you are either making a request, for example adding another request to their order book, or you are taking a request, for example dispatching a request that another person has just added to the request book. Creator charges are normally limited contrasted with taker expenses since trades need to boost individuals to make new requests. New requests increment liquidity, the measure of exchanging action that is occurring, which makes the trade more important. Charges. A few organizations that purchase and sell cryptographic forms of money guarantee not to charge any expenses, but rather they make benefits by charging a premium on the Bitcoin they sell. For instance, if the market cost of one Bitcoin is $7,000, the organization will purchase Bitcoin at that cost and afterwards sell it for $7,200. Exchange fees, mining fees. On top of some other charges or expenses you may pay, when you purchase Bitcoin or practically some other digital money, you should pay exchange expenses. An exchange charge is otherwise called a mining or organization expense and is paid to whichever excavator adds your exchange to the blockchain. This implies that on the off chance that you need to genuinely possess Bitcoin, you need to pay exchange expenses to have the Bitcoin shipped off your wallet. At the hour of composing this article, the base exchange expense is just a couple of pennies, 0.000000200 BTC. It is essential to know, notwithstanding, that trades and wallets frequently pay higher than the base charge to get the exchange added to the blockchain quicker. Exchange expenses don't increment with the measure of Bitcoin being sent. You can send 0.0001 BTC or 1000 BTC for a similar charge. Diminishing fees when buying Bitcoin. While picking which trade to purchase from, don't simply take a gander at the value that they offer. It is likewise essential to take a gander at the charge structure. Does the trade charge its clients to send money to or from their own trade accounts? Will there be an extra exchanging expense charged when you purchase Bitcoin on this trade? Is there an exceptional remembered for their cost? Responding to these inquiries will give you a more practical thought of what you'll wind up spending on Bitcoin from some random trade. You can likewise save money on expenses by purchasing Bitcoin straightforwardly from somebody you realize who might be hoping to sell. Be extremely cautious on the off chance that you go this course since there are such countless con artists out there. It's feasible for a trickster to mimic one of your companions or relatives and imagine like they need to sell you Bitcoin. Transactions fees are set by the network consensus and wallets generally calculate them based on a recent network average. That average is generally set by a consensus on the network. So people choose their transaction fees when they add a transaction, miners then choose what transactions they want to add to blocks. If the mempool is relatively empty, e.g. not many transactions happening, then lower fee transactions are more likely to complete quickly. If it is full and the network is busy, transactions with lower fees are less likely to complete as miners will prioritize higher fee transactions.